Well, let's get into that Nigerian market update now with Olubunmi Asaolu. He's the head of equity research at FNB Capital. Thanks so much, Olubunmi, for joining us this morning. Let's get straight into a look at the market's performance, because we've been seeing the market rallying and doing quite well for the 2013 period so far. What are investors you're speaking to at this stage of the game saying about market valuations right now?
Well, it's mixed. I think for the banks, there's a lot of comparison with emerging market banks, which I have to tell you, if you go back, 2-3 years, a number of investors would tell you we would happily pay 3 to 5 times book for an emerging market bank or frontier market bank, let's say a Brazilian bank or Mexican bank, but we would not pay 0.6 times book for a Nigerian bank because we're not really sure what's in the books. It's different this time around. They're now saying, Nigerian banks trading on 1.1 times book are cheap compared to emerging market banks trading on 1.4 times. So there's a lot of goodwill being shown towards the banks. The non-financials, it's a completely different story. There is a worry that the multiples are pretty rich. So I think there's a bit of a dilemma in the minds of investors, especially the offshore guys.
So let's look at those respective quarters then, and perhaps start off in the consumer space. Nestle Nigeria is expected to release results later this week, and the company's shares are by far the highest priced stock on the NSE. Some people have said that they see that share price easily getting to 1,000 naira, while others say it's already overpriced. Your view on that stock at this stage?
Yeah, an extension of what I just finished with in the earlier question. So I think, it's best to move away from the actual absolute price of the stock and let's talk multiples. Nestle, I think over the last 5 years, the peak multiple in every single year was not more than 25 times. So today the stock is trading on 31 times PE multiple for 2012 for EPS growth of 20-25%. You could argue that that goodwill that we talked about in banks, maybe if you extend that to the consumer goods space, maybe Nestle can carry that, but there's no doubt that on a historical basis, it is not cheap. But I guess the feedback you get from investors, both local and offshore, is if I sell my stock now, I may have to buy back in 3 months' time. So I look across the space and I think I want a stock that is high quality and earnings are pretty decent. And eventually they zero back in on Nestle. So that's why I think there's a bit of support there. But I don't know about 1,000 naira.
Would you be a buyer at current price levels?
Well, I mean, reluctantly, if you're stuck for options, because if you look at the other consumer goods companies, they're not delivering the kind of earnings that Nestle is doing. Top line is a bit weak for everyone, but Nestle's found a way to ensure that the bottom line is actually growing in a healthy fashion. The other names, whether it's, if you look across all the companies that reported this week or last week, Guinness, over the last 2 weeks, PZ, Flour Mills, the numbers aren't exactly blowing anybody away.
Yeah.
Whereas with Nestle, there's an expectation that 20% EPS growth is relatively okay. So from a relative point of view, you can reluctantly hold the stock.
Let's take a quick look then at the banking sector, which you alluded to a little earlier. I mean, the banks seem to remain the mainstay of the investor community. You're expecting results from late March, and most banks expected to pay a dividend right now. Your expectations for dividend payments out of these banks in this upcoming earnings season, and the type of dividend yields that are expected to be put on the table?
Yeah, historically, Nigerian banks tend to want to pay out quite a bit of their earnings and dividends. There are different reasons why this is the case. If you look at Nigerian banks and don't know them well enough, you would argue that they should pay out less. That's for another debate. But the point is, I think the dividends this particular Q4 reporting season should be pretty strong. So on average, we think that the dividend yields should be about 7-8%, which is pretty decent compared with consumer goods, where we think the average will be something like 2%. So the banks, again, have the upper hand on that point.